Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Rolled up wire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got inside. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Well, market not looking so hot. I don't know what else to say about it. It's just like a dumpster fire over here. We're looking at the daily chart in the S&P 500, 38.46, the key level down below us. Seems to me that if we can't hold 4,000, and I'm pretty sure we lost it yesterday, that's where we're headed. But you know what? This market, kind of hard to predict the play-by-play, right? Treasuries, woo. Okay, yesterday, CPI coming in a little bit hot, but only at the higher end of expectations. Big push down and then complete recovery. Market seems to be saying we're concerned about global growth. We think there's going to be a recession. Federal Reserve isn't going to be able to complete its plans. I don't know. Fed speakers don't seem to be changing their tune. And here, overnight, we are another step higher, and we are now clearly higher than the FOMC. And who knows, we might be headed to like the 120.5 area. So then we come over to the S&P 500, kind of a similar thing, but then they resolved down and we are now a step lower. Oil actually saw a little bit of a dip yesterday, but then came back up hard, and now we're retracing that. So I don't know if oil necessarily is, I don't know, this one's hard to sort out because they're going to be hurt by the global growth thing, but they're going to be helped by the Russia thing. And I don't know how you sort that one out, but interesting times to be an oil trader. Let's just say that. Natural gas still far off of its highs, but maybe stabilizing. Gold and silver still in the dumps. Copper getting ugly. Copper really getting ugly. Although really anything over $4 is still okay, relatively speaking, in copper. And then we got over here, Bitcoin, another large dump overnight. Not quite to 2,500, but getting there, and we are seeing all sorts of fractures in the Bitcoin ecosystem. I'm really starting to wonder at what point Bitcoin, I forgot we got the news. We've got U.S. initial jobless claims coming through here. And it is 203,000 versus the expectation of 192. And the PPI, month over month, spot 5 versus an expected spot 5. And let's see here. What's the core? What's the core PPI? Core PPI, actual 0.4, forecast 0.6. Okay, so more signs of peak inflation in that data. But the market not really reacting to it. Oh yeah, by the way, the dollar. Actually coming down a little bit. Sorry. Coming down a little bit here off of this move, but they are higher on the day. They're at 104. So lots of flight to safety here going on. This is like this is like panic, man. Next time you're feeling down about your portfolio, oh, no. That I'm not going to read that joke. That was a different joke. Yesterday, Americans paid the highest price for gasoline in history, and at the same time, Biden just canceled our largest pending American oil and gas lease sale? Really? After the above paper, my Twitter feed suffered enough abuse, trolling, and insults. The bot managed to block 14,000 accounts. Bitcoin is a magnet for psychopaths, gathers all conspiracy suckers, COVID deniers, anti-vax, climate deniers, and sadly, Putin supporters, says Nassim Nicholas Taleb. Whoa, wait. Tether tells you that you can buy discount tethers and redeem them to make money? Digital tokens address or digital tokens wallet for with any user for any reason or for no reason at any time. Oh, they can choose to not redeem them. I USDC to USDT is the trade of the day, flight to quality. Something has been going on in Tether world because let me bring this up over here. Sorry guys. Something is going on in Tether world because their reg has kind of been pressured, and there's like huge wash trading on the Bitfinex exchange. Um, it seems like that Bitcoin is pulling out all of the funny tricks when things are imploding. Let's see here, Binance scheduled maintenance. Yeah, right. Yeah, right. Yeah. So it looks like that there was a larger hit to Tether, but still, it moved the peg, but it didn't like destroy them like it did Terra. 0.97. Wow. We monitor several factors which we believe will mark the capitulatory low for stocks. This is a marketeer quoting Stifle Bannister. One on that long list is Bitcoin, which we believe still has downside to about 15,000, though for stocks, much less downside in our view, only 5% at most, Stifles Bannister. I don't know. I think that if Bitcoin starts to pierce through 20,000, that there would be so much panic that it will go a lot lower than 20. Well, it looks to me like the call today is long treasuries, huh? I mean, that's only a tiny little bit of upside, though. I think maybe I want to, well, let's just kind of watch it here. I haven't really been in the flow, so I don't think I want to come out and just like straight up make a call. I do see a little bit above us. Trading view, Matt. Okay. So I'm not actually seeing that much activity in the treasury. Was the PPI today bullish or bearish? It looks to me like the PPI numbers, I didn't dive into them too much, but the US core PPI month over month was spot 4 versus an expected spot 6. So I think that we're continuing to see signs that we've reached peak inflation. And, it looks like that last month maybe more was passed on to consumers than before. But, I think that the PPI does kind of suggest to us that inflation is maybe less of a concern going forward. Really, the way that the markets reacted yesterday, I think really strongly suggests that inflation is no longer the thing. Like it started inflation. Now I think they're more concerned by like China lockdowns, for instance. Let's see here. Bitcoin is now down 63% from its all-time high and its lowest level since December of 2020. Well, that's still too high. Do you think MicroStrategy is toast? Well, here's the thing. I don't really completely understand how that plays out, right? Like he said that 20,000 is when they would get margin called, but that they can put up more collateral and that they'll be fine. And then it's their price is like 3,000 below that or something like that. But you really got to question if the company can survive, just period. Like the stock is just getting obliterated, man. And there's a lot of people that have big options positions on like way far out. They're like in January options, but there's guys predicting that this thing is just going to be toast. Here's the thing. I don't know when 20,000 is going to get hit. Sure doesn't look good for Bitcoin right now, but they did hold 25,000. Anything below 30,000 is the way this is playing out, it's like, yeah, we expected there to be stress in the system and to see a lot of kind of like the worst frauds and Ponzi schemes, whatever, start to fall apart. But it's not quite falling apart quite like I thought. Like when I watch the Bitcoin price, it still looks largely correlated to the S&P 500 or the Nasdaq. So like I'm kind of having to wonder now, because if Bitcoin is blowing up internally, how are they not going down more? It was a good take right there. The 10-year. How are they not going down more than the Nasdaq? You know what I mean? If there's really that kind of stress going on underneath the scenes. And if so, at like what point does it like fall apart? But then you kind of it kind of makes you wonder, well, maybe the S&P is falling in part because of Bitcoin. And because, there's Tesla has some Bitcoin and stuff like that. So because I'm not seeing like the like all out capitulation chaos in Bitcoin that's like isolated. I would think that there would be isolated instances where like the overall market is not doing very well, but like Bitcoin just dumps on its own. I'm starting to see everybody's starting to call out their technical levels in stocks. Here's the thing. I definitely see 3850 below us as a key point, because that would be S&P 500 down 20%. But the economic framework that I'm seeing kind of sets us up in a situation where I'm not sure that we get any relief for a while. Okay, so I'm seeing a bunch of people starting to tweet now about Tether losing its peg. I don't think that it was that significant, but let's just come over and check it. I can see the treasury's coming back there a little bit, so it wasn't quite as well. Here's our spot. USDT 0.995. So they're freaking out about Tether losing its peg and everything, but it's not doing anything all that spectacular at this exact moment. Biden's whole goal was to raise Trump's gains. I don't know. I don't know about that one. Sure doesn't look good, does it? Well, it looks to me like the trade that I wanted to take there in the 10-year did not work because I was no way I was going to cross a 6-tick spread. I suppose I probably could have gone into it and I would be up at the moment, but I wouldn't be taking like a profit or anything. But that 26 did hold. And I was trying to lean on that, but there was no buys up into that. I would have had to have hit the bid. And I don't think that crossing that divide there would have really made sense. So I think that I sit back and wait for a different opportunity. Yeah, when I'm looking at this chart right now, and you can see that there was late. It was very late in the night where the peg became untethered, but it's not happening in more recently. In fact, we're starting to see some spikes. They're trying to recover it. So I guess we're getting a lot of tweets and news and stuff that's like super late. Right? Welcome to 6 hours ago. Let's see here, but Bloomberg does have an article about it. So let's read the Bloomberg article about it. Tether says it hasn't had any problem meeting redemptions drop as a function of demand, not a bank run. Tether, the largest stablecoins used in the cryptocurrency markets to facilitate trading, briefly dropped to the lowest level since December 2020. As fallout from the collapse of Terra USD token continues to reverberate across the digital asset landscape. Price slipped as low as 94.5 cents from its intended 1-to-1 peg to the dollar on Thursday morning in London before recovering to just above 98 cents. Paolo Ardorino, I didn't know that his last name was Ardorino. Tether's chief technology officer said in a tweet that investors can continue to redeem tokens at a 1-to-1 value to the dollar via its platform. When they're tweeting, listen, when you got to tweet stuff like that, you're scared, right? They're scared. More than 1.8 billion of Tether was removed from the market between Wednesday and Thursday as Tether's market value dropped to as low as 82.2 billion from 84.2 billion, according to data from CoinGecko. Okay. So that's what we got going there. Actually, a decent amount of overnight volume here in this thing too, by the way. Looks like somebody hit it, but you're only 2 ticks. It's not worth it. Well, that's all very interesting. So I had a fidget cube I was fidgeting with, right? And then yesterday the baby comes in and he takes it and I don't know where it went to after that. It's gone. It's gone. And I need something to occupy my hands. No, I that came out wrong. That came out wrong. Well, maybe they're going to try it again. I don't really like how that last swing went, though. Market's a little too quiet, don't you think? This market's kind of like, come on, Seth, let's which way you want to go? We'll screw you over either way. Eight point 2.843 is not too bad. You could sell into us right here. Well, somebody took it. Look, there you go. Yeah, that's a 5-tick spread. 5-tick spread's not optimal. I've really, I think to really get a good scalp sort of a thing here, I've really got to be kind of getting away with something. You know what I mean? Yeah, somebody's hitting into you that really shouldn't be hitting into you, and it's in a really bad spot. I mean, like they're at 220. If the 10-year was pressuring 26, that would be the spot, I think. The U.S. and world leaders are to announce $3.1 billion in COVID funding, says Politico. The action that we're seeing in the markets right now is a little disconcerting. Oh, I didn't even realize the S&P 500 is touching 3,900. So that's a 100-point loss now. So to Brad's comment here, how much of the decline do you think we can blame on Biden? Up until this point, I think it would be like, oh yeah, like Biden hasn't handled inflation well, and he kind of created this inflationary shock. And I suppose you could also blame his response in Ukraine. But would Trump have done anything different in Ukraine? I don't think so. It's a kind of a little bit like when you start to think about how much money they're spending in Ukraine now, and what else that could have gone to. I don't know, guys. It's getting a little like, you think zero? You think zero blame for what's going on right now? Well, I do wonder, is the primary concern for the markets right now Shanghai lockdowns? It kind of seems to me like the primary concern for markets right now may be lockdowns in China, right? And if that's the case, well, so now we got a big order below us and a big order above us. I wonder if the big order below us gets filled, if that big order above us sticks around, or if that is just somebody trying to coax the market into their fill. Could be there's somebody buying it there at 26.5. I don't think that I would get fills at 847. I feel compelled to trade, but this market action has me a little on edge. So I think let's just pretend that we got filled at 2.847, okay? All right. So if it is the Chinese lockdowns that is really causing this like seeming recession, then that does very much help Biden's case, right? Say it's not my fault. It was just, China and lockdowns and Ukraine and stuff. I had no choice, But at the same time, I do think that the current situation in the markets is very like the context within which all of that happened was very much worse, I think, because of Biden's stimulus bill that they passed right when he got into office. It was completely unnecessary and created more inflation. I scalped ZB for 10x. What? Maybe earlier in the session, I guess. Sure, yeah, I can see that. That would be a tough pick, but got it. You got it. Well, you see, it's backing off there. Most emerging market countries have major problems due to the dollar. Well, the dollar is definitely not helping the situation, is it? Because so I think like one of the first kind of warning signs that we got right before things like really started to get crazy and move down was when we got that GDP print, and the first quarter GDP print was negative, and the economic analysts all kind of dismissed that print because the labor and the consumer still looks really strong, and the decline in GDP was largely due to a crash in US exports, right? And what is causing that crash in US exports? I don't know if there's any kind of policy or anything that we've been doing lately that has been harming it, but having a high dollar definitely doesn't help, right? So you say it was luck. Could be. One of the things that I'm having a really hard time with in this market is, how do I sort out when I'm do something that it was good luck or bad luck or not? Because it seems to me with the kind of the risk parameters that I'm trading that a little bit of good luck or bad luck can completely make or break you, which says to me that we got to work a little bit harder here. I do think when I'm looking through my trades, and this might be confirmation bias, but it seems to me that I am not getting the best prices in many cases, especially when I'm in a trade. There's many times where it goes much further than I expect, and I get out late. It goes way far, and then it pulls back really hard, and I get out at a bad spot. Who's this left hash? Who hits first, Bitcoin or Ethereum? Brad says I have the same issue. Like I think when I go through my records and everything, it seems to me that in regular action I do have an edge. Like there was periods during the relative calm in the market where I was getting, it was like I couldn't lose, and my winners were much larger than my losers. So I was getting both good risk to reward ratio and high win rate. And then when markets started to get a little bit volatile, I think I lost the plot a little bit. It's been hard because when you get the volatility like that, you'll have big up days and big down days. So you have to be taking both sides of it, and it's really hard to be on the right side of that every time, right? So the answer for me right now is still we have to avoid volatility. But perhaps the you get out of sync. Yeah, I don't know. I don't think it's that. I think it's just that the volatility introduces a degree of randomness that is just very, very negative. Okay, what's this story here? Anyways, I think that for a market maker, well, even for a local or a speculator, that the volatility is like a very negative sort of factor, right? Like a certain amount of volatility is really good especially when you know what's going on. But when we start to get to the excessive levels of volatility, the action just becomes much more random. And so what's happening is you're putting yourself at the mercy of randomness, right? Except for that the moves are like way bigger than the moves from before, and so that can completely wipe out your gains in the more normal periods, right? So probably the solution there is you've got to have made the call on the thing before and be swinging into it and getting out when there's all of the crazy volatility, or just stay out. And I think that for me, the right thing here is to stay out, largely speaking, and just try and put more money in the market in my longer term accounts right now. Okay, so from FX Street, MicroStrategy stock is coming under increasing selling pressure as the crypto world stares into the abyss. First, we should point out that we have been here before. Bitcoin has gone through similar collapses, and so far it is still there. Oh, still here. Man, why am I having a hard time reading here? Bitcoin has gone through similar collapses, and so far it is still here. The fact remains it is highly volatile, and that volatility could be the downfall of MicroStrategy. Bitcoin is currently trading at 27,600, having traded near 2,500 earlier on Thursday. What is garnering the most attention for MSTR stock, though, is the obsession with the 2,100 level that Bitcoin is approaching. Now, it is only a bad day away from hitting that level. MicroStrategy CEO Michael Saylor is a big believer in cryptocurrency. Even in the most recent earnings call last week, he remained focused on Bitcoin deniers and haters. You also have another big development, which is that the deniers of Bitcoin and digital assets in general are now being silenced by the administration of the United States. Saylor said Bitcoin is better than gold, to call it digital, blah blah blah. I don't want to read his stupid quotes. Blah 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 blah. Right now, though, MicroStrategy does have more Bitcoin it can pony up to the loan, so the immediate margin call is not the problem. What is a problem is the domino effect. MicroStrategy has never made a secret of the fact that it is a leveraged Bitcoin play. For now, it appears to have plenty of reserve assets on the hook if needed for extra collateral. On the same conference call, the CFO also said that the remaining approximately 115,100 Bitcoins are held at the MicroStrategy subsidiary. Of the MicroStrategy of Bitcoins, approximately 19,000 are pledges of collateral towards the Bitcoin-backed term loan, and over 95,600 Bitcoins remain unpledged and unencumbered. How does that work exactly? You take a loan, you buy Bitcoin with the loan, and then you use the Bitcoin that you bought with the loan as the collateral for the loan. How exactly does that work? I don't think it works that way. I think there's something about the way that works that they're not telling us. MicroStrategy, however, does have a lot of debt, both in terms of convertible notes and bonds. Some of those are under extreme selling pressure, with the convertible note offering maturing in 2027 and trading at just over 60 cents on the dollar, and probably less when the market opens. The 2025 notes closed at 73 cents on Wednesday. MSTR's average purchase price for all of its Bitcoin is 30,700, according to its latest report. So it is now underwater on its investment. Not there alone, so too is Tesla, we believe, who famously pumped it with its purchase last year. In total, according to Refinitiv, MicroStrategy has $2.2 billion worth of loans outstanding, with $650 million due in 2025. Okay. The risk from the margin call at 2100 is not immediate bankruptcy, as many are predicting. As we have demonstrated in a normal market, MicroStrategy has plenty of Bitcoin it can pledge or sell to meet its margin call. MSTR stock does have a lot of debt, but most of it is unsecured, leaving the Bitcoin holdings free for use as more margin. The company has secured its debt profile quite well and has taken advantage of investors' recklessness during the Fed printing time period in the last 2 years. Basically, bondholders have lent MicroStrategy unsecured money to buy Bitcoin. How that is going to work out for the bondholders is the question, not MicroStrategy's solvency. With 2027 bonds likely to trade near 50 cents on the dollar today, that is pointing to a huge risk of default. The convertible notes for 2027 are not convertible into ordinary shares until after 2026, so bondholders are not free to convert and dump MSTR stock. They are stuck. Okay. that had some useful information on it, right? GameStop down 13% yesterday. Okay. Well, look, it's now it's giving us 2.85. So I think that this is kind of saying to me, maybe I don't have a good reason to take a trade. Things seem very, very dismal here in the morning before the opening bell, but we're down pretty big overnight. It wouldn't surprise me to see some sort of buying out of the gate or recovery of some sort. And I don't know, like it sure doesn't seem like the Federal Reserve is going to back off on the whole raising rates thing. Like I think that they do want to get back to neutral no matter what as quickly as possible. But I could take an offer at 2.85, but I'm just not liking this slow action. The first 30 minutes, hardly going anywhere in the treasury. Are seeing some big sells come through, some big changes in cumulative delta, both long and short. Kind of suggests to me that it may be better to sit out here for a little bit longer. My eyes are really itchy this morning for some reason. Well, we are not. Hold on there. Okay, there they dumped through the 26 10,000 contracts. That's got to be. We do have an auction today, right? What's the auction for today? 30-year. Well, I didn't see the icebergs in the 30-year. But that market volume that went through that bid that's more volume than like the whole rest of the morning session. But it was through an iceberg. I have a hard time making a big conclusion off of that. I'd be more inclined to believe that 26 could be a price that makes it difficult to get away from. So we remain sidelined. What's Silver saying here? I'm not saying that Dems are good at political strategy. The party has made some bad choices, but given that Republicans can win Senate and Electoral College majorities with less than 50% of the vote, Dems are fighting an uphill battle that should probably factor more into assessments. It's like playing a soccer match and man down. Situation isn't completely hopeless. Sometimes you can generate a semblance of something, but whatever you do exposes a vulnerability. There are a lot more ways to fail than to succeed, and you'll often look silly in the process. The political situation in the U.S. right now is starting to get a little bit more interesting, and I think that it was in part because of the whole abortion thing. I mean, if that decision really does come out like that, and I don't know when that decision would release, but that would certainly be something that would help with the enthusiasm gap that Democrats are facing right now. Democrats don't seem to be, Republicans aren't so concerned about that because they think that the re-election will hinge on economic issues. Well, here's the thing. If we are still down in the dumps / in a recession by the time the election comes along, then that may very well be the case. Okay. That's definitely going to be on everybody's mind. But I wonder, that's still 6 months from now. And the economic situation could look very different in 6 months. Like if the primary reason for the market bearishness here is concerns about Chinese lockdowns and their potential effects on the global economy, then we could be opening back up and recovering by November. So I'm a little concerned for Republicans that it seems like they're betting the house on that. What's Nassim Nicholas Phillips saying here? How to BS about returns. The fellow is down big time on his purchases and has lost several million so far. Statistical gerrymandering. Select a data point to fit a story. Use year to date, or a better gauge. But the maximum drawdown of Bitcoin is greater than 55%. Yep. It has not been an effective hedge against inflation at all. But honestly, gold hasn't been an effective hedge against inflation either. Right? Like when you come and you look at this move, like what was the thing if you're getting into the panic, let's just say that it is now March 2020, okay? You have to put money to work that you know is going to be in the market until today. What was the thing to be in? Because defense stocks probably like just everything has gotten slammed. Everything has gone down. I guess there are some commodities that are still relatively high, so I guess you probably want to be in some of those commodities. Huh? Seems. Look at this. The treasuries are pushing down now hard. So I was leaning towards that the treasuries would maybe make another move even further, but they're coming back quite a bit. It's not like outside of like listen, we have a range here down to 22-ish, and then there was a decline down to like 119.08. So like, like we were way back here, and then yesterday that we closed somewhere in this area, right? So we're just kind of like at the bottom of the range at the moment. Like there was a range here, there's a range here, and then there's the overnight range. So that move, just based on like price ranging, doesn't necessarily mean like breakout. We're gonna fall back, and this is gonna be like a really aggressive hawk move, but the volume on that was pretty excessive. So that's enough there that I really have a hard time trading against that. I got a small side project that I'd like to properly backtest and maybe tweak. Well, have you written anything in NinjaTrader 8 so far? Look at those backtests and then what's this? A bunch of things come through here on Twitter. Oh, you're on Sierra charts? I don't know. I don't know what Sierra charts has in the way of backtesting. To be honest with you, I haven't tried that. Maybe I should. Although I'm really starting to feel like that. How do I say? So like there's kind of two things that I've been interested in on the programming side. Like one is I'm still kind of doing these little kind of, I don't know what we could call them, like indicator soup sort of things. I have found a few indicators that seem to work really well, actually. But they're just like not quite enough. And so I keep trying to find like that one thing that kind of gets them over to the over the top to where they may be more worth trading, you know? And uh then the other side of it is like, what do you do for your take profits? Because I have a way of determining this from a volume perspective, but if you try and back test, if you try and set your stops and targets based on the back test, it underperforms because you overfit. So, um, I'm trying to find a better way of determining the stops and targets, and I've tried a couple of things. I haven't gotten there, but the more I go through it, the more I'm like, it seems like that what I really need is to incorporate more machine learning algorithms. So I have some stuff on machine learning algorithms. I just haven't really had the time to really focus on them yet. And I don't think I will for a few months, maybe in the summer. I got a video. I think I'm going to try and make this video all in one weekend. So I'll probably put a lot of work into that. Which means I should probably do a little bit of script. I need to brush up the script on that one. I could wait and do it next week, but I think either way I would want to write over this weekend. There's a lot, but it's hard to grasp, so I thought you might be able to show me the path. Yeah. I don't know how backtesting works in CR charts. I have all sorts of stuff to help you in NinjaTrader 8, right? But again, it's like in NinjaTrader 8, you got indicators. Is that really the way? Well, I don't know. Okay, so I thought about taking a trade. I was like, maybe 2.86 is fine. So let them come back up because I didn't want to like offer out at that price. And they fell right back. So that was kind of like what we thought, that we actually are still within this upper end range. Now there's still a possibility we come back to 26 and then they fall back to the lows. So that move, the issue with that move is that I don't think it's necessarily supportive of our larger uptrend theory. So UST's pool dispersion has gone from 0.78 to 0.91 in the last 2 hours. The amount of USDT in the pool going up along with UST, while USDC and DAI have been dwindling. I don't know what that means, but we're still seeing pressure in the Bitcoin space, basically, right? Anyways, so I think we got to get more stuff into the machine learning world, and that's where it's kind of like NinjaTrader is a great platform, but it kind of seems to me that if we really want to dominate the retail automated trading world, that we really should have a plugin that goes into Python and lets you write stuff in Python. NinjaTrader 8 for Python, right? And I've got an export out into it, so we can do some messing around, but that's interesting. Goldman Sachs boosts bond yield forecast sees 10-year U.S. Treasury at 3.3 by year end. Okay, so that is a story that could potentially affect order flow, right? Upgrades and downgrades by prominent analysts are something that can definitely cause large institutions to change their trades. And that might be a better flow to go along with than the supposed flight to safety that we're looking for. Man, oil is taking off here since the last like 10 minutes. Only when prices crash do they start shutting down the exchange. Apparently, Coinbase is down. So I think I am going to change my tune and maybe go long yields here off of that upgrade on in the forecast. 3.3 for year end is interesting. Current price doesn't look so hot, but well, I guess I will take that. No, missed it. Okay. I would have preferred to have market ordered into that and it ticked up like that, but there was some good volume on that last little push lower as well. So let's recenter everything. Oh boy, Washington Examiner says illegal immigrants, the first to get ballots of hard to find baby formula. Wow. That's going to be a story that's going to get certain people upset. The Biden administration has been shipping pallets of it to the border. Wait, what? That is a little bit like, okay, like it's not on the shelves. So this is a situation where the government could do something when they're not helping their own people. Of course, it's always going to be politically colored, though. I'm just kind of interested to see if that story picks up traction. That seems like that certainly amongst conservative media that story could pick up traction. Okay, well, as of yet, they're not like just running, but well, okay, there you go. I was thinking like, okay, it looks like maybe they're kind of like sorting something out and kind of balancing things out here, but then like there was a ton of selling there at 2021. The 30-year pushed in particular, so that's good. I'm seeing something's happening in the 2 and 10-year spread, by the way. That seems to be moving really aggressively all of a sudden. And that is definitely a new low in the 30-year. The 30-year looks like it could get to the bottom end of its daily range very quickly here. Well, even though there was a really good flood of sell volume through there and everything, the 10-year is kind of getting sucked back into that 21. So see if they have enough to keep it rolling. We'll also see there could be a change when the S&P 500 opens up, right? Although hopefully for us, it's interest rates continue to increase. Hmm. Yeah, some of the inside action here is a little finicky. So I'm having a hard time making too much of a read from that, but something that I am noticing is, well, okay, never mind. I was gonna say like it was like 800 by 800, and there was like a tick up. It was 800 by 800, but then that time they ticked down and they took two, three very, very easily. So I don't know. The market algos that took the fills on those are probably not happy about that. When the Federal Reserve goes, that's when gold will go, okay. I think the whole thing that I've seen about like inflationary assets throughout this whole thing is that there is nothing that fundamentally has to do well through inflation, right? It's all like what moves price? Orders. And many of the things, or it seems like all of the things that we, except for treasuries, of course, but that's a little bit different with treasuries, but all of the gold, cryptocurrency, etc., the primary forces in those markets are the speculation. And so it all just depends on how it captures the public's imagination. If you know the memes had gone a different way, gold would have done really well last year. And then everybody would make like very different conclusions about things, right? Yeah. So 2021 does seem like the center of the whole, but there's some definitely some weakness on the bids. And the 30-year in particular seems to be really heavy. So we are getting a move down, but it's actually steepening a little bit. I guess steepening with interest rates rising and it's steepening is, I would rather see it steepen. I mean, that's good for my banks, but okay, so there's some more volume in 19.5. That was only 400 to clear that price. It didn't take 19, so it ticked back up, but it was only 400. That doesn't speak well to their ability to hold any other bids below us, does it? S&P 500 starting to see more significant action and a bit of a sell here about 5 minutes before the open. Hmm. See people waking up. How are we doing on with the stream numbers? Yeah, it's getting up there. Y'all's waking up. It's a little bit lighter today though. 19.5. Gold is not priced in terms of orders, is priced in terms of bust orders made when the US goes bust. But right now the dollar is doing really well, right? Right now the dollar's doing very well. You know, like so here's the question for you. If you want to take that trade, when do you do it? If that's the trade that you're really looking to, the thing that's going to happen, that was a really ugly take right there. Okay. That's the thing you're looking for. When do you do it? Because dollar's doing really well right now. Now the time to short the dollar? Dude, if we have okay, so that's actually a little crazy to think about. Okay. So we think that maybe we're in a recession. Okay. There's a possibility that we're in a recession, and the market is certainly starting to act like it thinks we're in a recession, right? So there's some concerns that like this isn't going to stop, right? So 3,800 below us in the S&P 500, that's a good spot for sure. That's a good spot, but you know, it could be much lower than that. If this is something that continues on until like October, because I think that's one of my scenarios I've been looking at, right? Is like I'm a little concerned about what happens if this continues until October, right? We have volatility all summer long. Where would the dollar be at the end of that? Can you imagine the dollar above like 120, 130, something like that? That just seems so crazy to me. We're just trimming at the excess fat. Maybe you're right. I think in my heart, I still think that this is just a pullback. Like I think it's a 20% pullback, but yeah, I don't actually believe they were in a recession. I don't actually believe it. Would be amazing to have this volatility in the summer. Wait, have you ever traded that before, Oliver? I don't know. I would be careful what you wish for, dude. Having this kind of volatility in summer liquidity, I don't want to think that's like hell to me. I don't think I would enjoy that. I think that if that's what we're going to have this summer, that I'm just going to enjoy having a newborn infant son and just take a hiatus for 3 months, you know, on streaming. Because I don't want to have this degree of bond volatility with summer liquidity. That would be awful. Oh man, that was good. That was a good move. There was a pretty strong pullback and right back to lows and another new low. Oh, that's weird. My Ninja Trader's being weird. When I mouse over this chart, my cursor disappears. I wonder if that chart is broken. And I was hearing a sound, but I don't know if that sound was related to it. Let's see here. Nope. I thought that they were talking about something else. I thought that was a real story for me to read, but no, it was just some promotion thing on Twitter. So heard like a bloop, 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 but I think that must have been from my wife upstairs. Or my son. I don't know. This is weird. Kind of thinking that I need to restart NinjaTrader here, though. Let's see here. Yahoo Finance says stock futures drop, bonds climb after PPI report, says markets wrap. So we were steepening on that initial move, and now on this little extension lower, we're flattening back out. And so I am not getting paid here. I am very disappointed. Well, and I couldn't have actually gotten the 20. But I think what I'm going to do here is I'm going to bail and restart NinjaTrader because it's not behaving correctly here. Okay. Like, I don't know why I can't access that chart. That's really fucking weird. I'm just going to shut everything down here. What do you mean by this doesn't seem much? So demand, here's if you want to follow along, I wouldn't sit here and watch like, okay, where is Seth trying to get in and out at? Those are the places that I want to try and get in and out at and make those decisions. Don't think of it like that. What I would be thinking is, what is Seth saying about the market right now, right? So if you were following today, you would be saying, okay, the beginning he was kind of leaning towards long, maybe just because of the global risk sentiment overall, but we didn't get very much order flow in support of that long in the treasuries. So we kind of stayed out. Then we started to see some short action, and we saw an analyst upgrade to the yield forecasts. And so we decided to take a short off of that. Sorry, we went long yields, short treasury, and we got about $20 favorable excursion because of that. But then we did not get very favorable spreads, and the 30-year came back, and so we weren't able to get any money out of it. And which sucks because it was a great trade, but that one I would say is very unlucky. It's very unusual that for things to conspire against us that heavily. like if we had taken it in the 10-year, we would have definitely made money on it, right? What's this TY skew starting to creep back up? Is it starting jigsaw? Here it is. It's starting jigsaw. I should also upgrade NinjaTrader 8. Your demo CQG is not placing orders anymore? That sucks. Okay, well, that's better. So I'm kind of trying to check out the volume here. Okay, so I think what's going on is that there was some order flow, and I may have been right about it being because of the analyst upgrade. May have been in line with this. But I think what we're getting here right now is that the open on the S&P 500 has not been very positive, okay? They have been selling about 6,000 contracts or so on the first 5 minutes of the open. Oh, that's the heater. Okay. Like, what the hell is that? And then so risk sentiment came into the market. Like on this move up in the treasuries, there was a flood into the 6J and the dollar. So that gives us a little bit of a fraught trade here. I think that we could try going the other way now, but I'm a little concerned about if that's the flow that's dominating us, how lasting that's going to be. The ES looks really negative right now, but I mean, can they really just like go straight for 38.50 right off the bat? I don't know about that. That seems a little. Well, it's a bear market. We shouldn't count anything out. 38.50 is definitely the price below us that they're going to be trying to hit. Yeah, no, I think, well, we would be up $10 here the other direction. Yeah, and you don't really actually see the volume come in long. It was the spread moving us. Anyways, so demand, if you're still there, that's what you should be following. And here's the bigger thing. Based on the most recent research that we have, the efficient market hypothesis is false. A lot of trading and investing is based on the efficient market hypothesis, but it's actually kind of more complicated than that, because there's like a weak form and a strong form efficient market hypothesis. So strong form efficient market hypothesis would be like, yeah, like it doesn't matter what you're doing if you're trying to catch trends or whatever, the market is like amazingly efficient and that sort of thing. And then there's the weak form, which is like, well, the market is pretty efficient at like factoring in all available information, but you can maybe still like pick up trends and those sorts of things. Okay. But the reality is actually the opposite of that. The reality is that because orders have such a strong impact on price, these kind of like technical statistical aberrations that you might find in the prices are arbitraged, eliminated away very, very easily. It doesn't take very many orders to cancel those out. And meanwhile, we have these big players that are doing like fund rebalancing and stuff that have like such a dramatic impact on the stock prices that it moves them very, very far away from where fundamental value is. So basically, the market is more statistically efficient than it is informationally efficient, right? So that's why we care about like what's going on in the market, and we want to predict the orders, right? We need to find something that is predictive of orders. And some of the things that are the most predictive of orders are like the current market sentiment and what the news is and things like that. So I don't pay so much attention to what moving average bar like this. I mean, I will note like, okay, we made a higher high thing, because these are the things that like other traders watch, but I don't in the end actually find them to be very predictive of where we're going. I'm looking for like a larger thesis, like where is the next set of orders going to come from? It's really hard in this environment because it's so volatile, and you can see how it just turned around on us that time. We only lost $5, so I think we're, could have been a lot worse, right? I was kind of feeling like, oh well, this could be a pullback and it might come back down again. We should be, we should hang on. But now that I'm seeing it get super volatile again, I'm like, nah, I don't think. I think I'm okay. I mean, we could try going long again, but I don't know. we're kind of getting conflicting order flows, right? Now, if the S&P 500 turns up and the risk off sentiment, you know, reduces, then maybe we could think about going long yields again. And so the liquidity is not being very cooperative here, as we got this whole area right here that they can just go through just like butter. There was a big order at 119.25 though, so we should note that one is probably more the center point, right? So orders move the market. Well, I guess the thing is that if you're looking at orders, all you're doing is looking at orders. Oh my gosh, hold on a second. I don't know why, but my laptop seems my USB switch wants to switch over for some reason. It just did that to me twice. I'm like feeling all suspicious now. So my computer's doing some weird stuff. Anyways, that's another thing, is that my computer being weird a little bit has me like, okay, let's wait a few minutes, make sure that there's nothing wrong. Okay, anyways, so if all you're doing is watching the orders, I think that you probably could make money from doing that. But in order to do it, I think that you would probably have to have better tools than we do. I think that you would need, one thing that would really help is if you had like proprietary data sets so that you could identify the participants inside of the flow. If you could identify the participants inside of the flow, you could find patterns in specific players, and you would be able to separate them out enough from the noise to see what they tend to do, and you could try and front run that, right? So that would be one way that you could do it. Or you might be able to find something combining like machine learning and that sort of a thing. Okay. But from our perspective, we're still looking at more of the kind of the fundamental catalysts, predictors of order flows, right? We're looking for predictors of order flows, and we're watching the order flow more so that we can verify our theories, right? Because if we're trying to predict order flows, right, then how are we going to do that without actually watching the order flow and seeing what happens in situations, right? It's just, we don't want to get stuck into this fallacy that the order flow that I just saw is going to be very indicative of the order flow that I'm going to see next, right? Because you can see how it just flipped on a dime on us there, just barely, right? I mean, that was unusual for us to lose money there, right? But what happened? Well, the risk off sentiment came in and the flattening came in, and so it reversed the trade a lot faster than we anticipated, and it kind of deceived us because the 30-year came back up so hard compared to the 10, right? But well, fundamentals themselves don't predict orders. What predicts orders? Changes in perceptions about current fundamentals or future order flows. About future fundamentals and order flows, right? That's something that can predict orders, yes. Right? For instance, or an analyst upgrade. That's an analyst upgrade. An analyst upgrade could change people's perceptions about future fundamentals and induce them to trade. Right? So that could predict order flows, an analyst upgrade. Right? Market sentiment. Market sentiment is still very, very negative. That can predict order flows to some extent. But there's a lot of different things that you can use to predict order flows, right? And so kind of where the discretion comes in is sorting all of those factors out and picking a spot to take a trade. Oh, Tether is the Tom Bombadil of crypto scams. It'll be the very last scam to fall. Okay. I'm not that into Lord of the Rings to know why Tom Bombadil was the last to fall. Okay. Yeah. Just think about the current situation with the orders, right? So we've identified some things that are creating order flows, right? 100%. We've identified some things that seem to be predicting some order flows in these instances. The problem is the timing of it all and everything, right? Like we're getting both of these flows. One came in and then this other one came in. And, I don't necessarily know when those flows are going to come in and when they're not. There's nothing within those flows to tell me timing of it. And the timing of that particular trade didn't work out very well. So this is a situation where we might not have as strong of an edge because of the volatility. It makes it hard for us, right? We need to find it. We want to be in a situation. Well, it looks like they might be going lower again now. Like maybe now is the time to try and take it again. A bit at not as good of a price. But then here again, I'm just contradicting what I'm saying because I want to take a trade, but I think the reality is that the volatility is making our edge difficult. So we'll see this man. The flow is strong though. So what's going on here? I want to check out. I think one other thing that may be going on here is that we are to some technical levels on a daily basis where the treasuries might be coming off. Yeah, okay. So we are seeing the S&P 500 recover here. So that risk off sentiment does appear to be, yeah, okay, it's doing this thing to me. I hate it when it does that. Yeah. I mean, I'm probably like just it's all in my head, but I don't like it when I place orders and it seems to react to it. If I put a limit order out and it immediately goes up 2 ticks, like that's not right. Oh, so we do appear to have a little bit of a pocket of liquidity above our heads too. Well, the spread is a lot better than it was. It's only like 3 ticks now. It's not 5, 6, 7 like it was at the beginning. Wow, Walt Disney shares hit 2-year low after results missed. Last down 5%. Wow. My wife came in to get the baby monitor, and the dog came in, didn't want to go away. When do I start buying all of the Bitcoin and Ethereum? We did talk about cryptocurrencies a bit earlier. Yeah, you know what? So watching this right now, I really do want to take the long again, but it's being a little bit shifty on me. So I think that we may get a move, and this is just going to have to be one that I sit out. They're trading a little bit of volume there at 20.5. So I don't like the liquidity situation here. There seems to be a liquidity pocket, and we're like right in the middle of it. And so I'm worried that if I try and take this trade again, that they're just going to get sucked back into the 20. There's definitely some weakness in the bids though, right? That's what's kind of making me be like, oh, I would really like to put a buy here in the yield. Plus, we have gotten flow both ways, so it's still possible for them to like stop here and treasury shoot back up and visit. Like that sort of thing happens all the time. Okay. So the USDT dip, there was definitely some pressure on them overnight. I haven't seen anything too significant this morning. I still look at the chart of Bitcoin, and they appear to be following the NASDAQ still. So it's kind of weird to me that like everything is falling apart in crypto land, and you're not seeing like a more, isolated like Bitcoin selling off on its own. So that's kind of what we were saying about that one. But now that we're below 30,000, like that's the thing, is that what I saw was that like the margin traders, like the margined traders, all kind of had their stops and everything below that 30,000. Like I think that most of that is gone. I don't know if you have these like big longs to make another little push and liquidate them with the exchange shenanigans sort of a thing, right? So if you're still long, man, back up to 2.88. Oh, I guess it was 2.9 that I was trying to get before, right? So anyways, all those small guys, I don't know if you have a whole lot of feel for them. So now you're going after the big guys, right? But what are we seeing? It's like it just follows the NASDAQ. And the big guys all seem to say that indicate that they're super safe still, but I don't know about that one, man. I guess the thing is that I'm starting to see like fractures in Bitcoin, but it's still not to the like this drop and decline in Bitcoin reminds me more of the decline that we had during COVID than it does of the 2017 decline, right? Loop. So I've seen all sorts of people start to call out technical levels in Bitcoin. There's a couple of people seeing it go to like 20K, 15K. My own technical levels, and those aren't necessarily levels that I would expect to see support or resistance at, but just rather that for me from a risk reward perspective, it maybe makes more sense. It's still way down. Nassim Taleb is really piling on the, Bitcoin sucks tweets today, though. 11K, says Tony. That'd be awesome. So here's the thing. If they fail 20K, that's going to be a problem, right? Man, so we're still seeing some excessive flattening here. So I'm not... I think that might be part of my hesitancy here. I'm saying like the flow doesn't seem right. Like there seems like there's this hole above us, and I don't. I think that I'm seeing that because of the spread. So I could potentially still try to catch some from going long yields, but I don't know. And the S&P 500 is not like in the clear, right? Like it would not take very much for them to go and take lows, and then you could see all of this risk off sentiment come right back. Yeah, I would expect Bitcoin to have like an 80 to 90% drawdown. Totally. Well, I'm a little frustrated here. I think that this is going to go without me, but I don't think that I should really actually be putting the risk on here. Maybe if they gave me 2.87 again, but sure doesn't look like you can get that at the moment. But this is probably, now that they're trading like volume there at 17, I don't know if that's like really a spot that you really actually want to get in at, because even if they go lower, that might be right back to where they balance out at. So, and the 30-year is not as of yet pushing further yet still. But I guess the other thing the market seems to be suggesting to me, if we do take a trade, is that if we get a good move, we should just take it. Like we should take the quick profit, because there could be really strong flows coming back. What was the next step to squeeze in more speed into my seat? Well, I mean, if you don't have a high refresh rate monitor, I would probably get one of those. The NVMe, hard drive is a lot more useful from like a charting and backtesting perspective. Okay, so you see right there, that's like exactly the spot that I was saying, like I could come back to there. You don't necessarily want to mess with that one. In fact, if we were still believers in the short yields case today, this is not a bad spot to go short yields. I don't feel like I have conviction to either side now. You see that? So I saw the volume coming in, and when it got to the point where it was like, I just can't handle it anymore, I just want to click in so bad, I knew it was going to come back there. And now look, if we had been long 287, only $5 out of it. Man, all of the major financial news outlets have said something about Tether this morning. Financial Times: Tether has vowed to maintain its peg against the dollar at all costs after a tumble in the price of the world's most important stablecoin heaped fresh pressure on the cryptocurrency market. Excuse me. I wouldn't say completely overpriced, but probably unnecessary. Yeah, 144 hertz. So like 144 hertz is like really common and cheap. Whereas once you get above that and you go for like the 250 hertz monitors, you're talking about very premium monitors. So you're paying up for those ones. You long Bitcoin for the Tether dump? Okay, have fun with that one. You're addicted. That's not a good thing. You know what? I really think that the trading world for us is going to change a little bit. after this cycle. And we're going to have to think about that sort of stuff more, because what's happening is so the micro treasuries have only been around since last September. So it's been like what? 8-9 months, something like that. Okay. I'd say that what we've got in the 10-year is a great success. I really do. A lot of people will mock it like, oh, I don't really trade it yet, but I think it's a great success. And what I'm starting to see now is I'm starting to see the platforms kind of adjust. So the futures space was always like the sophisticated one. Like that's what attracted me to it, right? Futures are a very sophisticated instrument for very sophisticated traders, and it's for the people that want to be like the most active and involved in the markets. And so all of the tools for futures trading were really sophisticated tools. You got all the order flow stuff. You've got the basically NinjaTrader is like the best indicator ecosystem platform out there. You don't find any other platform with as sophisticated stuff. Like there's a lot of stuff for TradingView because it's so popular, but you don't find as advanced of an indicator over there as you do in NinjaTrader, right? But now that there are micro futures, and especially now that there are micro treasury futures that are really such small risk, I think that you're starting to see it change a little bit. I think that you're going to see more brokers and software developers out there trying to make things more accessible to people. And I think that, even though I really like to see the order flow and the DOM, especially if you're going to trade on like a longer time frame horizon, which you can do with those micro futures, you can really use like a simple interface to trade it. It's something that's just like a buy and sell. And then there are, I don't know, it's expandable. Like you can start just with a really simple interface, and then you can kind of, as you level up, you start to use other tools and stuff like that. So no, not MetaTrader. Screw MetaTrader. Hate that. This is the worst. That's the worst. That's the one platform that I'm like, I wouldn't use them. Anyways, so but there's some more accessible stuff coming. I'm gonna bet you that the thing that we're gonna see in the future is the ability, like NinjaTrader for mobile, right? I think that's probably like the next step you're gonna see. So from that perspective, what it means is we're gonna see a lot more a different kind of player in the futures trading space. And for that player, I think that the dealing with gambling addiction will probably have to be a greater concern on our minds. You get what I'm saying? Because it will be just too easy to do it. The risks, it's only $5. But when you have gambling addiction, it just piles up and piles up, right? Well, it's telling me I could have made $10, but this action in this area is quite choppy, isn't it? Let's see. There is a possibility that this floor falls out. S&P 500 is doing okay at the moment, but they still seem to be fighting. Jordan Peterson, there is little more terrifying than the possibility that you could come to a crisis point in your life when you need every faculty you possess to make the decision properly, only to find you have pathologized yourself with deceit and can no longer rely on your own judgment. Oh boy. That's why you started mining crypto so hard, so you had income to learn to trade? Well, you got to be in it for the long haul is the thing with trading. Takes a long time to learn. The micros are good because you know, if you're only risking $5 a day, if you're only risking like on average of $5 a day. So like just stops and targets like in normal action, I think 10 bucks is fine in the treasury. But on average, you're losing $5 a day. You can do that perpetually, right? That's just like, don't drink a Starbucks anymore, right? So it makes it so much more accessible to a large swath of people. And, I think that so many people kind of approach futures as like very technical. I don't think that that's right. I think that I think that futures are actually the least technical, and the 10-year treasury in particular. So the 10-year treasury is just like such an efficient instrument that it's really like I've always found that when I'm testing some indicator or whatever, like if I test it on the ES, it does okay. If I test it on the ZB, like it maybe does okay. And then I try and test it on the 10-year and it's just absolutely dismal. It's just that instrument, like any kind of statistical aberration you could really find out of it, it seems like they've long sucked that out decades ago, sort of a thing. And um the treasury is much more responsive to the predictors of order flow that we're talking about. If you want something technical, I think you got to go for Forex, right? Because Forex definitely follows these very clean kind of like paths, and then breaks because of key news that you don't have access to. So I'm not saying that you should trade Forex. Um, I mean, if at the very least, if you're going to do it, trade the FX futures, but there does seem to be more support for technical trading over there. Like if you were a bank, if you were trading on an FX desk for a bank, I think that you would probably pay more attention to technicals than you would if you were trading the treasuries for a bank. Could be wrong about that, but that's my theory. That's my theory. So from that perspective, that actually makes treasuries more accessible to people to some extent, doesn't it? Because what are you saying? It's not about this moving average and all of this nonsense. No, just what's going on. What do you think is going to happen? What's the sentiment here in this situation? Are people going to be buying or selling off of that? Right? Yeah, Forex for day trading, that's the worst. It really is. Well, like so if you get rid of the, your broker trading against you aspect of Forex, I think that there's a really serious issue with Forex, and that is that, and it really is in support of what we talk about here in futures, which is you're looking for predictors of order flow. And essentially in the Forex world, those predictors of order flow are very much hidden from you. Like you can't even, for starters, you can't even see the order flow, right? But because it's just like big banks trading back and forth across each other, like you really don't get a very good window into what's going on in the market at all. I think that with futures and with ES and Treasury futures, I think those are the places where you kind of have the best window. And maybe even to some extent in the commodities futures. Although in the commodities futures, I think that you can become an insider in those, but you're going to have to learn a lot and work to do it, right? But in current foreign exchange, like unless you have like some sort of inside track to what the government is doing, I don't know if trading Forex really makes sense. But it does seem that technicals, become a more dominant factor in that market because of that. I was tracking the order flow of the yen and euro futures for a while it's there but not really useful. I felt like that. Well, yeah, because here's what you're gonna see in the currencies is that it's gonna follow like this really well defined range, and then all of a sudden, bloop, right? So you're in here, you're going short, trying to take off this range, and then you get blown out. That's what happened to you. It's a very fat tailed. So like there's it's kind of a double-edged sword. Like there's some very consistent and reliable kind of technicals there in the currencies, but they have fat tails. So they're not there, you don't actually make money from them. Well, so the treasury went lower there. The 30-year hasn't. So you're still not getting 2.89 yet, but it looks like they may get it. It does seem overall that they're heavy. The S&P 500 is pushing up at the moment, so there appears to be some equity correlation. That's one that I hate because equities can, to me, seem so random, and I don't want to be an equities trader. I don't want to be an ES trader. If I wanted to do that today, I would go and trade ES. But it could still tell us, if we get a little bit of a pullback, maybe we could feel a little bit more confident in trying to take this long. But the timing, 813, I don't know. I think that just the one little loss that we took is probably good for today. I think that I probably panicked a little bit too early on that one, but I was kind of panicking because I was worried about my computer. Man, talking about the flows, remember that documentary about floor traders they made? And there's this one guy that he had an overnight position in the Japanese yen, and he got blown out and he lost so much that he's basically banned from trading for life. And I think he still works on the floor, like for the exchange in some aspect or something, but he can't trade because he couldn't pay. He had to declare bankruptcy. Like that guy's story is so miserably. I don't know what I would do if I was that guy. Like, I mean, you have to accept what happened and everything, but like that would be so devastating to like a person's conception of self. GPUs are turning into paperweights. What do you mean by that? Dude, they're still too expensive. Makes me wonder what the future of GPUs is going to be, though, with this is the first time in a while that I've seen technical demos that like people are really impressed with, but the technical demos that you get from Unreal Engine 5 are like amazing. So the games that you're going to be seeing in 5 years are going to be a lot better graphically than the ones that you have right now, and that probably will finally give people an incentive to upgrade from their 1060s. Nah, they're not cheap. They're still like $500 for like the cheap card. Dude, I remember when like the 1060 that I bought was like $200. 1060 was $200, and that was when it was a brand new GPU. No, you show me a 3080 for 500. I don't believe you. I haven't seen that. Okay, let's go to Newegg. Even though I know that there's been some drama with Newegg and I'm not supposed to use them anymore, but I still do. Components. Oops. No, I did this stupid thing. I clicked on the wrong thing. Components. Jeez. There we go. Video cards. Desktop graphics cards. Okay, so you want a 3080? Dude. Asus ROG Strix RTX 3050. So the economy card, $500. I miss the old LAN parties. Everybody was upgrading his PC just because of that. Yeah. You know what? That's the thing that really sucks about like the world post Steam is that LAN parties aren't nearly as common anymore, right? Because to really play with each other, you basically have to still go through the internet, and nobody can support the infrastructure for that. Like if I held a LAN party, I would be playing consoles or like old games like StarCraft or something like that, stuff that still has LAN play. Yeah, maybe you'd see them used. Okay. ebay.com. GeForce 3080. That came back in the treasury again. So I'm actually, even though I could have made like 10 to 20 bucks, I wouldn't have made the 20, but maybe I could have made 10 to 15. The order flow actually is supporting my position here that this isn't actually a very good trade location. For good grief. Okay, so it needs to be like auctions. You kidding me? Well, okay, 940 is not bad. 940 is not bad relative to what they were, but I think they come down. So we're still having chip problems, and so it may still be high, but with cryptocurrencies coming off, that certainly helps. But I think that you should still be able to get them cheaper. Like I really think there should be a point where the top of the line card will be $900. Like I think that the 3090 GT whatever should be about 900. That's what I think is like what you're getting for your value. So, but the market is such that you can still, the older cards are still really useful, at least for games. Now, if you're doing TensorFlow, I haven't gotten into performance metrics with that yet so far, so I don't know how much benefit some more powerful hardware on that front will be. Wait a week or two and mining profitability will flush out so much hardware. I really hope so. I really hope so. I don't know, man. So like, I'm just not seeing that Bitcoin falling apart thing here. It's moving correlated. I'm not seeing like the active panic. So I don't know, like that kind of makes me worried. So here's the thing. Does having a really good computer help with backtesting speeds? Yes, but I haven't been able to take different hardware to really try. Hey, Intel, if you want to do something cool, come and do a sponsorship with me. You don't have to let me keep the hardware. I'll give the hardware back. But if you could help me get a PC with like the latest processors, and we can see how much of a difference it makes in backtesting in NinjaTrader 8. And we could see. But one of the big bottlenecks, Max, in backtesting in NinjaTrader 8 is often it comes down to memory, actually. So, yeah. TLA traders, you knew where I was going, especially when if you want to backtest like the order flow sort of stuff, which I don't know how accurate they do. They always perform differently when I try them live, but I've had what happens to me is like I'll start backtesting them. I'll start testing them during that period, and they don't do very well. But it's like during the periods where I wouldn't expect them to do very well. But it's just like, wow, the drawdown on this is more than I want, so I don't go further, even though they may actually be like really effective strategies in the long run. No, what NinjaTrader has is tick replay. So what it does is they have a historical best bid, best ask, and then based on what that historical best bid, best ask is, you look at all of the orders and the timestamps on the orders to determine if they would have been a buy or a sell. But that's not 100% accurate to what actually happens, and especially when you get into more choppy trade, fast trading, then that stuff is going to be less it's going to be less reliable. So when you're backtesting, and especially if you're like, doing optimization runs and stuff, you could be optimizing off of bad flow. So what you really need to have is something that tracks it historically and saves it on your computer. And I have some stuff for that, and I just have like this long list of stuff, and I just haven't gotten to that one for some reason. But I made a change to my indicators, and then I kind of dropped it, so I didn't really get deep into testing it. But supposedly my indicators you should be able to backtest with. So that's kind of where the problem is with it. That's why NinjaTrader doesn't necessarily support tick replay, a historical tick replay for backtests. You think dropping market will increase or decrease chances of a soft landing? Because if everybody is invested in the market and it drops too hard, there will be no soft landing as well, right? Well, the thing that I'm not unsure about is like, oh geez, that's a really strong up move in the S&P 500. That maybe they're going to make a run for 4,000 today, maybe, and maybe we almost get 2.89 now. Yeah. I think that NinjaTrader is really great to get you started. Like if you haven't done any algorithmic trading, then for sure start getting into NinjaTrader 8 and dive deep and backtest a bunch of stuff. You're gonna learn a lot. But I think that if you really want to make money from algorithmic trading, that you have to start to get into machine learning stuff. Not quite there yet still. Maybe now we'd get the film. I really hate taking a trade with like only 35 minutes left. Ninja is C#. So yeah, that's a problem. What we really need is we need a futures platform that has Python, that it's built on Python. And what I'm doing is I'm exporting it. I'm exporting the data and then analyzing it with Python. Is my current project. Just sitting here talking about it with you guys. There it is. Okay, 2.89. So there could be a little bit more in this next push here in the treasuries, and this is definitely giving me more confidence in the long trade. It does look like we could have probably have held from 2.87, would have been a good position. It's just because they never really pushed beyond you. It was just very unclear flow. So I'm still okay being out. I sure wish I was in it now, though. You should build a block. Yeah, I should. Well, if I had access, well, not if I had access. So if we get the stream to, let's say 15,000 viewers, let's say we doubled the number of viewers, then we would probably be generating enough from the stream to pay the development costs of a platform that's like that. Because I think what I would need to do is I would need to make something that plugs directly into Rhythmic. It needs something that plugs directly into Rhythmic. So help the channel out. Make sure you like all of the videos, leave comments on all of them. Comments are what, guys, I got to tell you, I haven't talked about this in a while, but when you comment on a video, that makes all the difference, man. You start commenting on the video, and that's where the videos start getting hundreds of thousands of views. And then we can use that to, because I know what you should think is like, well, why should I help you? Well, I tell you why, because I can do all sorts of great things that, a regular trader can't, that you can come back and use, right? Like we could build a platform. That would be really great. More, better research, all sorts of things. So the whole community benefits in the end. So when you're watching one of my videos, leave a comment. It doesn't even have to be like a particularly insightful comment or anything. Just whatever you're thinking about in there. Heck, go and argue. If you could start an argument in the comments of one of the videos, that would be great. What's in it for moi, right? Sorry, I'm like blowing my nose here. It's really gross. I don't know why. My nose itches so bad all of a sudden. Can you use your GPU? Well, so if you're using Python and TensorFlow and stuff, then you can. Or PyTorch. I've been using PyTorch. I actually think that PyTorch is better for what we're going to do. So I'm using PyTorch because it had a specific model that I wanted to try. But yeah, I got it set up, and yeah, it will use your GPU. But it's using your GPU to do like the neural network calculations more than anything. So I'm trying to get it so that you're still using the NinjaTrader backtester, and it just gets the predictions from the model back through a socket is basically the way it works. Man, it's just my nose is so dry, and it itches. So annoying. I'm definitely allergic to something in the air, I guess. Could be the dog having come in here. I don't know. So they're getting the 830 natural gas numbers here. Treasury's still kind of acting a little... They're still kind of acting like they could just completely reverse on us here, right? Anyways, leave comments on videos. So we had that video with where we responded to a Daniel Inskeep video, because he tried doing algorithmic trading, not him programming it. I'd love to see him try programming it, but it's a hard thing. But to see he was trying somebody else's system and it didn't work. And there was a lot of like problems that I think maybe he knows these things, but he didn't like call them out directly. And so we made a video. I don't think we've caught his attention yet, but I think it'd be a really useful video for him and his audience. So if you haven't watched that one, go and watch it and leave a comment. Right? And leave a comment with like your own experience. If there's something you disagree with, like, then go ahead. Even if you don't actually disagree with it, like, start a little argument in the comments. Those comments help so much. Seriously. That's the single largest thing that you can do to help us is to leave comments on videos. So. I'm watching this here in the treasury. It kind of looks like they're going to suck back up. But I don't know if they're going to be able to get very far away from 16 is the problem on that one. 16 was kind of support from before the break. And now it's acting as resistance. But that's a price that could be more likely to become like the center of a hole. There is a big target below us. House panel advances bill requiring Supreme Court to develop code of ethics. So I think I'm seeing like the Democrat Party is going through like the 7 stages of grief as it pertains to the Supreme Court and abortion. I don't know what phase this is. Bargaining? Is this the bargaining phase? I don't know. It's like they think that that all of the Supreme Court justices made a moral that they lied to them and that they're being immoral by striking down the abortion law because they all said that that abortion was precedent. But I think it's more complicated than that. What's the trading software? I am using Jigsaw Day Trader for the DOMs, and the chart, like the chart down at the bottom, is a NinjaTrader 8. I got a screen full of charts over here to keep track of the commodities complex. I have a video on the channel that's like, what's the best futures trading software platform, where I talk about it. I also have an affiliate link for Jigsaw, so I always want to try and point that out, right? That I am a Jigsaw affiliate, and if you purchase Jigsaw through my affiliate link, not only do you get $100 off the price of the software, but it helps the channel out, and we use that. And like we were talking about, I guess there's other things that I could do. I much prefer that like the viewership of the channel is paying for things, but there are some development costs for making our own platform of sorts that, if we were getting it from the YouTube views, that would be better. But it would also be one of those things like there's all these other things, people buy Jigsaw, etc., etc. If I started pushing that harder, then we could probably pay for it with those things. But no, I don't want to be spammy to you guys. And of course, we can make it from trading too. But I'm trading very, very minimal risk here, and I think going forward, I'm just only going to keep myself small risk because, I think that's kind of the track that I want people to look at. Is I want them to think about, okay, yeah, you can stay small, and this doesn't have to be this huge moneymaker for you. You can just like make up your data fees and totally be happy with that. Multiple metrics that JP Morgan Quant follows suggests we could be closer to a bounce. Yeah. I have not seen that video. I wouldn't worry too much about what he says. He's a little crazy. I know what you're talking about, but I haven't watched it. I don't think I'm going to bother. I really don't see. I'm surprised that channel has any activity at all. I shouldn't focus on that too much. It's hard for that because they harass us so much, right? But so I don't really want to. Really, yeah. Oh, geez. Yeah. Well, you probably aren't familiar with the history, but like really, really early on in this channel, he tried to come into our Discord and was really not. Well, you can go on Futures.io and you can read the log, but basically we banned him. And he's been obsessed with their channel ever since, right? So I don't know if he mentions me in that, but a big part of why he goes after Jigsaw is because I use Jigsaw. So, yep. It's pretty funny. But he should be more concerned about himself, right? Like they were posting stuff on Futures.io of customers of his who had their licenses revoked just because they weren't like spamming his videos and stuff like that, right? Like, can you imagine that if I was in here and I was like, if you guys don't go and leave a comment on my Daniel Inskeep video, then I'm gonna revoke your license from my software and you're gonna be in all of these. I just can't even imagine. But that's like what goes on a daily basis over there, dude. It's nuts. It's nuts. But I've already said too much about it, right? So as soon as I start talking about them, he's gonna come over and he's gonna start trying to harass me again. But I just don't care. I don't even pay attention to what they're doing anymore. Yellen, stablecoin risks not yet at a systemic threat scale. is probably like a narcissistic personality disorder. I think. Listen, let's change the subject to something a little bit more broad, okay, guys? Because we remember earlier we were talking about, we might see more small players come into the future space because it's becoming a lot more accessible, right? And so in that kind of a scenario, I think that we have to be a little bit more aware and concerned about other traders developing like gambling addictions, right? And when it comes into a situation where it's negatively affecting your life and your relationships, guys, you should seek professional help. Okay? You should seek professional help. Don't go and harass other people's channels or get mad at other people. Just go and see a therapist. You know what I'm saying? I'm interested. This is like the third day or so that I'm hearing Yellen say stuff about stablecoins. You gotta wonder about the cryptocurrency space. Like this, even if Tether doesn't go, the Terra thing is enough. The government is going to regulate this. They are going to regulate this, and you gotta wonder when they do, how bad is that for the rest of the cryptocurrency market? Because from my perspective, Bitcoin would maybe have never have come out of the 2015 highs if it wasn't for stablecoins. I mean, because the whole time during 2017, you had Tether. That's like when Tether started. So we don't really know a market without the stablecoins. I don't know if cryptocurrency can survive without it. And here you got the government saying they're going to do it. And I come over here and I look at, like they're in a moderate uptrend in Bitcoin. The major moves still seem to be correlated to the NASDAQ. I don't know. Does that mean that nothing's going to happen, or does it mean that like the worst is yet to come in cryptocurrencies? I can't tell. I don't know. Can't tell. We've done okay. We've had a couple of new people come in, so I hope that you guys have gotten good, useful information today. It's been a little bit lighter of a stream, though. You use Dogecoin as a stablecoin? What, really? Doge taking off is just like the craziest thing. Because I always remember after 2017, I remember saying like, well, if the cryptocurrency market ever comes down low enough that I feel comfortable investing, and there's something is done about the fraud, I'll get into those, and Dodge would probably be one where I could put a little bit of money in it, because you know that eventually there's going to be some spike. But what actually happened was like nuts. Like for, what was it? The high there, 70 cents or something? Crazy. Absolutely crazy. That was way further than anything I ever had in mind for it. That was like, oh man, Seth, if you'd put $1,000 in that thing, you would have been a millionaire, man. Maybe the garlic coin I still have the garlic coin, guys. Garlic coin has been doing not so bad. Not so bad. Well, they have been rotating around 16, but the treasuries overall still look a little bit heavy, and it appears that there may be some space for them to, rates to rise throughout the session. Maybe we could see, I don't know, is 3% too far away now? But I think that would kind of be like the longer term upside target if you really want to be long. But I don't know the current situation. I suppose you want to be long if you think that the S&P 500 is almost done here. I accumulated at low ranges, held it kind of like the VIX, but I said back in the day when it was chilling, wow. Well, there was a point when Doge was taking off. There was a short point where garlic coin was so high. There was this guy that sold a ton of it, though, and that really killed the momentum. If he hadn't have killed the momentum, I still think back on like what could have been or what could be, because garlic coin would be so easy to pump to like just astronomical heights. Because the thing is, there's plenty of coins out there that don't have a whole lot of supply and just don't have a whole lot of trading or interest in general out there, right? But you have the community that garlic coin, because garlic coin was a very large subreddit, like all of Reddit got in on that thing. So if garlic coin ever like took off, like they got above, let's say like let's say $1. Like if garlic coin got above $1, right? Like the meme potential for that to just like explode and create a huge mania is just insane. And maybe not as insane as it was with Dogecoin, but the potential upside is much higher because there's low supply in garlic coin, right? But the problem, you've never heard of it. Yeah. Well, but the problem with these sorts of things is that from everything that I've seen, garlic coin was like a pump and dump sort of scam. Like it came out, price was really high in the beginning, and then somebody came in and just sold everything, and then they left it for dead. Like all of the original developers left. So it was like a abandonware. But there was so many people from Reddit that were on it that like it's kept going. So there's still potential. You have to wonder though, maybe it never like if the cryptocurrency world continues the way that it is going, or it has been going. Yeah, it's a little, well, except for that back then it was an ICO, right? It's like it was like your typical ICO rug pull. You always see this, just like shibcoin, right? It's never last cycles hype coins that take off in the current market. It's always brand new coins. And why is that? Because they're all scams. These guys are putting these coins out and pumping them up to garner the interest and then get in, right? But because these guys are all about the short-term game. If you really wanted to play the long-term game, I think that Garlic Coin would be a better position. Like, you can acquire it at ridiculously low prices over a long period of time and then pump it. And it would be so easy to pump it. Like, if you had, I mean, some of these got like these stable coins, they're talking like billions of dollars. Okay. If you put $1 billion into Garlic Coin, yeah, it'd be worth like $10,000 a coin. Right? Anyways, I just want it to happen because I own Garlic Coin, of course. Them treasuries kind of look like they're gonna try and break the low in the 10-year, maybe here before we leave. Maybe. Well, yeah, like that's exactly the thing, is there's like no liquidity. But that's why I'm saying, if you started pumping it, you'd be able to pump it hard. And you'd do it over time, right? You'd have a little spike that day, and then let it chill out for a week or two, and then do it again. And you do that enough time, and like people just start jumping on. And that's kind of how Dogecoin eventually happened. And then Elon Musk got involved, and then it was like mayhem. I'm surprised that they didn't. We would have gotten filled at 2.89, but it hasn't gone that much further beyond that. Still 2.895 so far. And I was worried that I was going to miss the bus and we'd be at like, like that would have been a $40, $50 trade, but it wasn't. It was only $20 trade, at least within our time frame. Might do so. Don't go and pump it just for my sake. That's the problem, is that I'm not willing to go in and do the shady things, right? Nope, I'm just gonna hold it and wait, and eventually someday maybe it'll take off. But the whole point of that was, there was a point. Like, here's the thing. I have a lot of it. Like, I mined it for like 2 years. I have a lot of it. And it's all in a cold wallet. Like, it deleted every trace of it and just put it on a piece of paper and stored it somewhere in a safety deposit box. So like, there was this one point where it was going up, and the amount was starting to get a lot. And I was like, if this actually is the one where it's going to take off and it makes me a millionaire, I'm worried that I'm not going to be able to get it out of my cold wallet into an exchange fast enough. Now maybe if the thing would have been, if you can get somebody at Coinbase to list it. Okay, if Garlic Coin got listed at Coinbase, then that would be it. The Garlic Coin would be like $2,000 the very next day. Like, by the time that it got on Coinbase, that's what it would be worth. Because there's only 69 million coins, and they've mined like 90% of them. So, but anyways, I was saying, so what's the next step in the cryptocurrency world? Is there like a crash and a couple of stable coins, or maybe regulated and stuff, but then it goes back to business as usual? Well, I'm a little skeptical that Bitcoin can remain. It seems to me that a lot of the positive price action that Bitcoin saw in 2020 was largely driven by Tether. So I don't know if they can really keep the cryptocurrency markets going to the same degree without the stable coins, and if there's regulation and stuff. So is it the case that the regulation comes in and I never get my Garlic Coin jump? That would suck, right? But maybe the regulation comes in and the cryptocurrency market goes on, and at least some large coins continue on, and there's still lots of little projects everywhere. I don't know. It's going to be an interesting next like 5 years in cryptocurrencies now that the governments and the market at large is aware of the risk that stable coins pose to the system and are dedicated to doing something about it. I wish that they had done this 5 years ago, but what you gonna do? What you gonna do? They came back up there at this 16, 17 or so really easily, even though they were like really starting to press it. Yeah. Stablecoin emergence is an argument for a CBDC, so yeah. I have to say, I know this sounds, because especially the people in the cryptocurrency space are not happy about the whole idea of a CBDC, right? Because a CBDC would be a huge hit to the whole use case of, or at least the original use case of Bitcoin, right? And then there's all of the anti-government conspiracy theorist people. They don't like the idea of a CBDC. Of course, they would prefer things to be like a market currency. They're all in on the kind of the idea of Bitcoin. But so there's all of these fears about what you would do with the CBDC. That you could program into it, you can only buy a certain amount of a product. If you buy a certain amount of a product, then you won't be able to buy any more. And you only get one wallet in the CBDC. It would be like tied to your social security number, and you wouldn't get another wallet. Or you'd have to talk to the government for them to switch you to a different wallet. That sort of a thing, right? Like that's kind of the whole look. If they did that with the CBDC, I don't think anybody would use it. Right. And if there wasn't like some degree of privacy, I'm not sure that anybody would use it. But if it's done right, if the CBDC is done right, and you have that privacy, and it's just like digital cash, which is what it really should be, and hopefully Congress ensures that they make it that way, then CBDCs are really exciting to me. I would be like, okay, I'm going to learn everything I can about programming with this thing. Because can you imagine, like, if I want to have an e-commerce website, I just have to interface with the CBDC. I don't have to do any of these PayPal integrate, any of that sort of stuff anymore. It's a completely different world. And I think there'd be some interesting use cases for it. A digital currency backed by a government. That makes me excited. I would want to be at the forefront of that. That sounds like a money-making opportunity. You're working for a crypto company, and I can tell you the demand is so high. We are doing tokenization of securities. All the financial services providers are asking to do it. Yeah. I don't know about that one, because like if it was Goldman, they would just start making their own thing, right? It's kind of weird because the banks and the exchanges, those are the ones that have the greatest use case for a cryptocurrency, for like Bitcoin. Most of crypto spheres aren't able to see the possibility just because because the Bitcoin would have to go back to the store of value argument or whatever. I don't know. I kind of wonder. So here's the thing that's always pissed me off about the cryptocurrency community is that I think that the BCH guys should have won. I don't think that Bitcoin Core are I think that they're manipulating Bitcoin to their own use, and Bitcoin would have been a completely different world if you could actually use Bitcoin for transactions right now. If you could actually use Bitcoin for transactions right now and they hadn't have done all that stuff back in 2017, then people, there could be large swaths of the internet using it today. I mean, there was already a surprising amount of adoption before, and it kind of all died after 2017 because it was too expensive to use, right? But it would be in a different place. And it would be even to a place where it would be like, well, the government can try to make their own CBDC, but, why would anybody use it when they can just use Bitcoin, right? It would be like that, but it's not. They screwed up. World would be very different. Because I think in the end, what moves markets? Orders. So if you want to have a cryptocurrency of sorts, right? You need to have a reason for orders, essentially, reason for people to buy it. And what is the reason for people to buy it in Bitcoin? 100% it's speculation. It's 100% speculation in Bitcoin. But if you can buy stuff with it, if there's a reason for you to go and transfer your dollars into Bitcoin because you can more easily do commerce with it, now there's a reason for it, right? And that makes it more valuable. That makes it infinitely more valuable, right? This is the real, economics behind it. And what the problem was is that they were looking at it from, okay, I'm a miner and I want to make money. And at some point, like, I'm not going to make any money from mining. So why would people want to be able to continue mining? So they had to do something to make it so that, miners would keep going. And that meant making it so that you can't really use it for transactions. And then you have to spend a ton of money to be able to use it. So then they ruined the whole thing. But I guess that kind of suggests that I don't think that Satoshi's original vision was economically viable. But if it's backed by a government, now you got something. Now you got something when you have the rule of law backing it. Okay. Yeah, it's time for you to go. It's time for me to go too. 8:58. So one trade, small loss. It's okay. I don't know if tomorrow's probably Friday is going to be a light day. For me at least. And next week might be fraught too, because until we've got the options expiration next Friday, I don't know if this market can get out of this. I don't know. So, but I will still be here. I'll see you guys tomorrow. Stay profitable, friends.